everyone, Cato here, just giving you a bit of an update on the new indicators that we have here. On the daily chart here we have an example. What you're looking to do is trade in the same direction as the litmus test. So that's, first main key point is which direction is the litmus test. And if it's above the line, as you can see that is a 1, that's a 2, that's a 1, and it goes negative there and it goes positive again there. If you're looking for trades when the litmus test is above the line, you're also looking for trades when S trader is above the line, and typically as well, quite useful is to use the M trader as well, and or the M trader 3. So let's just hypothesize that we were trading on the basis of all of that. If you look here, you will see on that candle, litmus test went long, and we have a slight pullback here. But if you look at on the left hand side, look on these data windows here. So when litmus test went long there, you can see that the BBR was 7.41 and the bull bear butterfly was 11.25. Litmus test was a 2, M trader was a 1, S trader was a 1, S trader 2 was still saying we're kind of bearish on this. Now if you wait a little bit longer and you get this candle here, you will see that S trader 2 is still bearish, but at this point M trader 3 has gone long, and you can see the BBVR is 5.58 and the bull bear butterfly is 14.5. So if we played a trade there at that point there on the 10th of December, we would be looking for a long trade if it broke out above there. That indicator would have given us a long trade as well. The stop would have been around this sort of level. So if we'd got in on that trade, we could see we'd get a trade in that direction. It would be a very good trade. Target, where it looks overall, if you set yourself a target of T4 and accept the stop that as recommended by the indicator, then that overall will give you a good result. Now clearly you have to decide whether or not when you get a pullback here, as we have here, whether you take the trade off, and indeed that might have been a valid thing to do. So then you'd be waiting for another attempt, and then you might have waited for there. You would probably got entered on that. You probably wouldn't have hit the stop. Can't guarantee that, can't tell exactly. But then the target T4 would have been out here, and you may have hit T4. So it's up to you how you trade it. All of these different things give you more insight, more confidence. Here, for example, we have a trader pushing up on that candle, which would have put you in on the trade there. That would have taken you through. Litmus test again has gone long here. It's got very messy at this point, topping out. So you'd have got into the trade, you'd have had to manage the stop. You probably lost money on that one. Coming around here for the shorts, which is actually what I did. When we got round to this sort of level here, I entered short. I set a target of about here. So I took the trade down to there, which was really good money, but I failed to collect on all the rest of that. So again, a better thing would do rather than hit the target, which I actually did an aim for a target down here somewhere, quite ambitious, and I made good money out of it. But it could have done a lot more. So yeah, what can I say? Trading is up to you how you trade it. Do you trade for the targets? Do you trade to just keep on in? Do you trade when you wait and see weakness? It's decisions you have to make. And just email me if you've got any questions. Look forward to hearing from you. Bye for now.